Hello guys, good afternoon. This is FTS once again. I am not a financial advisor, neither do I give financial advice. This video is for educational purpose only, and as we know, past profits do not guarantee future result. The forex market is volatile as you take your trades, apply risk management. All right, on the 1st of October, the United States experienced a government shutdown, right? So this week is still to continue. That is why we did not have NFP on Fridays, right? But this week, hopefully there'll be NFP. So the week analysis for the week ahead says a United States government shutdown will remain the focus that is this week as the extended impasses between members of Congress show little signs of improvement. So the shutdown jeopardizes releases from federal agencies, including the trade balance, jobless claims, and the budget statement after the September job report and other key data has already been delayed. Still, the minutes from the FOMC last meeting is still expected among the non-government release, right? So October Michigan consumers sentiment. Okay, sorry. Yeah, October Michigan consumer sentiment survey will be high. Then also on the monetary policy front, the ECB will release its meeting accounts, and the Reserve Bank of New Zealand will set its policy rates. Okay, so that's New Zealand, right? Then, meanwhile, key data in Europe, including Germany and Italy, industrial production and the Eurozone retail sales, inflation will be due due from inflation will be due from Brazil, Mexico, Russia, and other major Asian members, right? Yeah. So let's head to the economic activities for the week. So as you can see, Monday, Tuesdays, there's no important news, right? So all eyes the news activity for the week will likely commence on Wednesday when we have Reserve Bank of New Zealand interest rates and FOMC minutes, right? So the minutes just like the what was discussed in the last Fed meeting, right? That United States would likely cut rate, right? Yeah, and they will likely cut rate twice this year, and of which they targeted 44 basis rate point cuts, interest rate cut this year, right? Yeah, so so that is what so they'll likely reaffirm the outcome of Powell's the FOMC meeting, right? In the last for the last time they had it, right? So we're expecting FOMC meeting to this month, right? Yeah. Then on Thursday, the Fed chairperson will likely speak. So we're going to focus on that too. And on Thursday as well, initial jobless claim data. Then on Friday, the non-farm payroll, right? They did not have it because of the government shutdown, right? Yeah. And if the government shutdown continues, the dollar would likely go bearish, more bearish, right? But we all know that they priced in for rate cut already, right? So if you look at it from the Fed rate watch to just a minute. So you can see the next FOMC meeting is going to be 24 days from now. That is towards the end of this October, right? So you can see that the pricing for rate cut 96% probability of easing, right? Yeah, so we know that they are likely going to cut rate, right? That notwithstanding, United States economy is not that bad per se, right? So let's continue before we come back to other activities. So, like I was saying on Friday, the NFP and unemployment rate rise. Yeah, so these two news are important, right? So let's watch and see how this week will be. So main activities for this week include the NFP, the Fed chair Powell speech, and the FOMC minute, right? So these are the key economic news that would likely happen, and the Reserve Bank of New Zealand will have their interest rate decision on Wednesday, right? So let's go to here straight to analysis, straight, right? So as we can see, the dollar. So these are the fundamental technical reasons why the dollar will be bearish or bullish as per se, right? So the government shutdown reduce US data flow, right? Markets struggle if off, right? So that's it. So lower near-term growth risk pricing, right? Yeah. So we're expecting the Fed still expect easing, right? I've showed us from the Fed Watch too that the rate cut is still priced in already, right? So I would likely come here from time to time because this is just the guide you need to have, right? So 25 basis points and other 25 basis points by December, October, December, right? So you can see the treasury supply continues. Low yield 10-year bond yield, right? Yeah, you can see that from 10-year bond. I'm going to open the 10-year bond yield later. I just want to show us something here before we go into the main analysis, right? Technical analysis, but fundamentally is zero. You can see that the dollar slipped to 0.4 and dollar slipped 0.4% and is consolidating around the 97.40, right? Yeah, so this is where the DSY is be consolidating, right? Though if you look at it from delta and you understand what this is trying to say. When I open the technicals later, I'm going to show us from this, right? So a break lower conference bearish continuation, right? Yeah, so near term corrective upside possible to 97 to 98 if yield spike, right? And we know that the yield with if yield spikes, it likely favors the dollar index, right? And if yield does not spike, that means the stock market is slightly stronger. So what is the bias? Might bearish policy easing expectations, right? So low yield and but corrective rally remain plausible. So right now, the dollar the is still bearish, right? So, but corrective rallies plausible. So I understand what it means. I'm going to explain later, right? So dollar is just mind bullish until cut rate, right? So the NFP for this week will likely determine if the bearishness will get stronger. And we know that because NFP is job data, right? Yeah. So let's head to USDJPY. So, if you look at the bias from here, bullish, strong yen, right? But I don't think I agree with it that much because, I told us early last week that on the 4th of this month, they will likely have election, and we saw the outcome of the election yesterday, right? Yeah, so we might wake up to a gap. You can see here, Japan braces for a shift to right under Iron Lady Fan Takeshi, right? So this is the first female prime minister of Japan, right? So you can see that Sinae Takeshi is poised to become Japan's first female prime minister with a reputation as an energetic nationalist and a fan of Margaret Thatcher and heavy metal music. So her ability to build a lasting legacy will depend on her capacity to restore the fortune of the ruling party and unite it, as well as connect the young voters and win back public support, right? So the next one I'm going to talk about you see how it's going to affect the yen, right? So Takeshi policies include her views on spendings and central bank stimulus will be closely watched by investors with some expecting a fall in the yen. Look at this. Take a look at it. A fall in the yen and a rise in the stock due to her uh, uh, espe- uh, expansionist spending tendency. Now, she's the kind of person that believes in the stock market, right? So when she's going to come in now, she unlike Shigeru Ishiba, who is a hawkish who has the hawkish point of view. She has the dovish point of view. In essence, she supports the Japanese stock market. The relationship between the stock market and the bond market, right? So whenever the stock market is strong, we expect the bond market to suffer it. And whenever the bond market is strong, the stock market should suffer. You can see that Takeshi wins to support Japanese stocks, right? Why it weighs on what the Japanese yen, which will likely affect the bond market. If the Japanese bond market is affected, that means the stock market will likely rally. Now look at this: Japanese stock markets will likely get support following surprise victory of pro stimulus Sane Takaishi, right, in the nation's ruling party leadership election. So the yen and long-term government bond will continue, we come under pressure with investors expecting the yield curve of the yield curve to steepen and reducing expectations of the Bank of Japan rate hike. Right? So at this moment, we are not expecting rate hike now because she's the kind of person that support the stock market, which will likely affect the bond market in a negative way. So Takaishi Winds is expected to raise concern over the rising bond supplies and be a boost in Nikkei. Nikkei is a Japanese major stock, right? With domestic demand and small cap shares possibly getting a significant tailwind in the short term, right? So we're expecting the Japanese yen, like today, when the market opens, we'll likely wake up to a gap, right? Yeah, because of the election, and we're going to expect a short-term sell for the Japanese yen, right? Yeah. So for me, this is not really so political change. Takeshi may push for fiscal stimulus. Could could be yen pressure if market expect more JDB insurance, but Bank of Japan directly stays silly, right? So that's it. So in essence, for me, based on these two analysis right now, Japanese yen will be what short-term sell. So we're looking out for a gap, and if it buys, then we'll likely enter for a sell to cover the gap, and if it's selling, then we go along with that, right? Yeah, so let's talk about the GBP. And also for me, the GBP right now fundamentally is still bullish because of the United States bearish nature, right? So sterling highly correlated to the dollar in the inverse correlation, right? So with dollar consolidating and soft, the GDP should benefit from that, right? So UK data like a long-term fiscal concern remains, but not the dominant price driven by this. And so in terms of interest rate differentials, UK, they are still on they're holding rates, right? While the United States economy, they are cutting rates, right? So in terms of interest rate differentials, the GDP should be bullish because they are holding rate, while the United States economy they are cutting rate, right? Yeah, so that just is so fun. So slightly bullish, yeah, slightly bullish and same time, right? So slightly bullish US consolidation correction dynamics helps GDP, right? So GDP is slightly bullish, but not that bullish. But the most strongest currency that would likely go well right now is the euro. Euro is strongly bullish. I vote for euro, strong bullish. Euro stock. Decoupled from immediate Fed stock. So, US 2 years bond yield differentials narrow support euro. So, euro equity strengthening, right, and resilience. Euro equity strength and resilience. Data not dramatically worse. Political risk exists, right? I always say this that the mainstream is not showing something that is happening live right now because we all know that the strongest economy in Europe, France and Germany, they are going through economic hardship because Germany is looking for cash to fund Zelensky. Why France is in a very big mess right now, but and I'm not saying this whole thing playing out in the whole space. And in terms of interest rate differentials, euro, they are not cutting rate now. They manually cut rate in 2026, right? Yeah, so they are still holding rate while United States economy are cutting rate. So euro is very strong bullish. So right now for me, euro strength is what I trust the most. Why Canada dollar is for me is bearish, bearish, it's bearish, right? So Canada remains sensitive to United States direction. Canada growth is weak as back of Canada has signed easing, a signal easing, right? So sorry, the signal easing that is structurally headwind, right? So um trade weakness with tariff and weak second quarter GDP reaffirms downside pressure. So just know that Euro card, GBP cards, USD card, they are going to be bearish, right? So Canadian dollar is a prime. For me, it's one of these trade I'm going to focus on this week. Canada dollar and the yen, right? I'm going to focus on this week, right? I'm going to focus more on that, right? So in terms of the Aussie is slightly bullish. So Aussie is still tightly inversely correlated to the dollar, right? Because as the dollar is softening, softer USD and commodity demand support oil. So domestic data, right? PMI and CPI have shown a pocket of resilience, reducing immediate dovish bet on Reserve Bank of what? Australia. So slightly bullish. Yeah, I support this slightly bullish. So the ones that are bullish mainly dollar and sorry, the euro and yeah, euro is the strongest bullish. Then little bit of GBP and Aussie. So USD bearish, CAD bearish, right? Yeah, then gold as well. Gold is bullish, right? Because gold is measured in dollar size. Dollar is falling, gold to rise, right? So it has of sentiment. So I'll likely look at the 10 years bond yield, 2 years bond yield, volatility index, then S&P 500 and gold, right? So let's take a look. Now, looking at the 2 year bond yield, right? Look at it. So the 2 year bond yield has been falling, right? Yeah, we saw the 2 year bond yield is falling. So that means if the bond market is falling, it means the United States DSY should also be on a bearish spring as well. So yeah, it's also be on a bearish spring, right? So look at 10 years as well. 10 bond is also showing the same thing, right? Yeah. So a little bit of correction might likely push the dollar downward, right? Then let's look at volatility index that shows the tension in the market. If there is fear in the market, the tension in the market, we use volatility index to confirm that, right? Yeah, a reading above 20 means there is a risk on market. Sorry, there is tension in the market, so we are expecting a risk on, right? Yeah, sorry, a risk off, right? We're expecting a risk off. That means the market, the safe haven currencies or commodities should be activated. But right now, the price volatility scale is showing 18, right? So the moment we see price rallied all the way to 20 and above, right, due to political pressure and uncertainty, right, then we start focusing on buying Japanese yen, Swiss franc, gold, and even somehow the dollar. But investors are already, they are being, they don't have confidence on the dollar right now, right? Yeah. So if you look at the S&P 500, right? So the S&P 500 tells you that the bond market is weak. Whenever the stock market is rallying very strongly, it means the bond market should be what to be weak. So look at the United States stock market, right? All the way from here. So I remember this particular time when I gave this analysis in my team, right? So where there was something happened and the dollar crashed so hard and immediately the stock market crashed and the bond market rose strongly. Then immediately it crashed. Then I think that was which month was that? That was in April. Yeah. So you can see the stock market is rallies very stronger, right? Creating all-time highs every minute, right? So you can see that the stock market is really strong, right? Yeah. In as much as the stock market is strong, the bond market should be weak, right? Yeah. And if bond market is weak, that means the dollar index is weak. So this is sentimental in the sentimental analysis, right? Yeah. So in terms of gold, right? So gold is still bullish and gold still continue to be bullish. So gold is still creating all-time high. Gold created all-time high last week, right? Yeah, created all-time high of 3,800 and 800 886,000 per ounce, right? Yeah. So that is that Bitcoin created a new all-time high, right? This we saw Bitcoin because what over I think $22 billion was pumped into the crypto market this last week, right? Yeah, so it created a new all-time high of $122,000, right? Yeah, so Bitcoin is still climbing, right? But Bitcoin might do a little bit of correction before going high because whenever a new all-time high is created, we expect a retracement, right? Yeah. So for me, when I wake up to a gap on USJPY, setting. So if price gaps to the top, take note. If price gap to the top, right? Let's say we expect gap to the top, please sell. We'll definitely wake up to a gap because of the election that happened yesterday. If price gap to the top, please look for a way to sell and cover the gap. I mean, and even take it down. And if it does the gap to the upside, right? Yeah, we said sorry. I thought I was analyzing the JPY index. Sorry. All right, sorry, I was looking at JPY index. Sorry, this is what I was looking at. So what am I trying to say? I gave some analysis, I think last week when we started, right? I looked at this, right? So in this, you can see it has given us evening star already. Technically, it has given us evening star. Like what I'm saying, price we will definitely wake up to a gap, right? If price gap to the upside, please sell it. Sell, when I mean sell, buy all the JPY pairs. That is what I mean. Buy GBP, JPY, Euro JPY, CAD JPY, NZD JPY, CHF JPY, and USD JPY. But if it does not gap, please, they are all going to be this because the prime minister that won the election now, Sinai Takechi, she is a born person. She's not she's a dovish. So she would likely not she would likely tell Governor Weda not to hike rate immediately. So the bond market will be stronger in her time. That is what I'm trying to say. But rate hike will likely come in handy, but not now. Right now, the Japanese the Japanese market, the bond market would likely be affected negatively, while the Japanese stock market, nickel, will be boosted, right? Yeah, so that's what I'm trying to say. So, when we wake up a gap, buy USJPY, buy GBP JPY, buy CAD JPY, NZD JPY, Aussie JPY, and Euro JPY. That is what it is, right? Yeah. If it gaps to the top like this, please, as the Japanese as the JPY index coming down, the JPY, the Japanese pair, the JPY pairs should rally. That is what I'm trying to say. So please take note. So when the market starts, I will not repeat myself. I will just go and be trading this thing immediately. That's the short banker for me. I know what it is, right? Then I said for USD for GBJPY, slightly bullish, right? Yeah, slightly bullish. So I said slightly bullish, all right? So slightly bullish. Last week I was expecting price to hit this level, right? A bit of the analysis I did, but so based on it being a zone, right? Based on it being a zone, price didn't really hit there. This is what, let me show us properly. Yeah, but following FBG from here, fair value gap from here, the fair value gap triggered, right? Yeah, so the fair value gap from here. So price used the fair value gap to trigger and rally all the way to the top. So if you look at it from lower time frame, like 1 hour, we're expecting it to rally. So I will likely see price coming down a little bit here before going up, right? Yeah, as market opens, right? So this week we happened, right? Therefore, Euro USD, like I said, Euro is the strongest pair right now. The test of Euro and all of that. Euro is strong at the moment, right? So I'm also expecting a stronger Euro, right? Yeah, I'm just giving us based on the fundamental analysis. USD card, I'm going to sell. Look for what to sell USD card, right? So I'm sorry, I'm going to be able to buy USD card because USD is stronger than card, no matter what. It's stronger than card, right? It's stronger than card. So if here doesn't happen, I'll look for, A plus setup from here, right? I'm going to look for A plus setup from here. This is a good, valid A plus setup. I know what A plus means, right? Yeah. Break of structure, liquidity, and valid other block. But the fair value gap used, but this is an A plus setup. So I'm going to wait for price to get here and, buy the USD. Why Aussie? Like I said, Aussie is also bullish, right? So I will likely, when price comes here, I think I'll look forward to buy a Aussie, right? Yeah. Okay, so that is what it is, right? NZD, I think they have an interest rate decision meeting on Wednesday, right? So let's see, A plus setup as well has also presented itself. So it's an A plus setup, right? Yeah. So fair value gap or other block, break of structure, liquidity, right? Internal liquidity sweep, right? So you can see everything A plus setup from H1 using NZD USD, right? So you can see our A plus setup there. Yeah. Okay. Oh, we have a solid A plus setup here. Yeah. Okay. So break of structure here already. So this is an A plus setup, right? For this. So for me, I don't think this is going to apply because this is not going to apply anymore because I would wake up to a gap. Exactly, going to wake up to a gap, and the gap might just come down. If it comes down, that means we're going to buy. That's what it means. If it gaps down, we're going to buy. right? If it gaps and this analysis, I dropped this analysis when I was doing analysis within a week, so I have to get this, something like this, but I didn't post it because I was waiting for it to get here or waiting for this weekend. But based on the fundamentals that happened this weekend, so we're expecting in a negative JPY, Japanese yen at the moment, right? Yeah, so that is it. Like I said, GBP it's on my bullish this week, right? So by all the GBP pairs, they are bullish, right? Yeah, GP USA, GP JPY, GP CAD, GP AUD, GP NZD, right? Yeah, why all the Japan, all the yen pairs, right? They are going to be bullish as well because the Japanese yen is in a bearish condition because of the new parameter that just won election, Sane Takeshi, who is a bond person, who is a stock person, right? So he would likely object the rate hike at the moment, right? So right now, the bond market would likely rally while the stock market would likely rally while the Japanese bond market would likely suffer for a while. Then later on, then they might talk about, um, the rate hike and all of that. But currently, right now, no, that's not going to happen, right? So that is it, right? So dollar is going to be bearish. So let's wait and see how the whole market plays out this week, right? Yeah. So for me, dollar is going to bearish. Like I said, bearish dollar, bullish GBP, bullish euro, bullish AUD, bearish dollar, bearish Canadian dollar, and bearish Japanese yen, right? Yeah. So that is it. Okay. So these levels are still okay, right? Yeah, levels here are still okay for price to come down for selling, right? So I'm looking forward for price to. Okay, so I'll be looking forward for bearish dollar, right? Yeah, I'm looking forward for bearish dollar, but let's see a little bit of rally, right? Yeah, let's put us a little bit of rally before price will likely come down, Yeah. Very low. Let's wait and see, right? Let us wait and see how the market goes, right? So that's it for me this week. So for me this week, bearish dollar, bearish Japanese yen, bearish Canadian dollar, bullish GBP, bullish euro, bullish gold, bullish Aussie, and bullish Kiwi dollar. So that's it for me this week. Uh, Stay blessed. All right. Thank you.